Welcome to Quick Bite, your fast and friendly Florida insurance.
Hello. This is Rashonda, agency owner of the ISOM Insurance Group here in the Sunshine State of Florida, back again with another Quick Bite episode, your fast and informative insurance market update. Today is Saturday, June 27th, 2026, and we're continuing our series on the legislative the legislative session recap that we did not finish from the beginning, the legislative session that happened at the beginning of the year, and now the June special session. So, in last week in part one, we talked about the Florida's property tax battle, the June special session, the proposed constitutional amendment that will now go before voters in November, the new insurance education initiative for high school students, and several consumer-focused bills that passed during the January 26th legislative session. So now we're going to continue our recap of it, but be sure to check out that video if you have not had an opportunity to. Today we're going to go behind the curtain. We're going to talk about the bills that most Florida consumers will never read, never vote on directly, and may never even hear about. But these are the bills that often have the biggest long-term impact on insurance rates, claims handling, and the stability of the insurance market. These are the bills that affect how insurance companies operate, how claims are reviewed, how lawsuits are funded, and how regulators monitor the industry. And while none of these bills are as exciting as hearing you're getting a tax break, I can tell you for me, that's really exciting. They may ultimately have a bigger impact on your insurance experience over the next several years. So let's jump in. Let's start with one of the most debated bills of the entire session, SB 1396, also known as the Litigation Investment Safeguards and Transparency Act. Now, I know that the title sounds like something nobody would voluntarily read on a Saturday afternoon, but stick with me because this bill could have a significant impact on future insurance costs. First, let's talk about what litigation financing actually is. Imagine someone files a lawsuit, a third party investor steps in and offers money while the case is pending. In return, that investor receives a percentage of any future settlement. Some supporters view this as helping people access justice. Others view it as turning lawsuits into investment opportunities. The legislator clearly leaned towards the second concern. Beginning July 1st, 2026, third party financiers can no longer control legal strategy. They cannot tell attorneys what to do. They cannot decide when a case settles. And if a foreign entity is involved, that involvement must now be disclosed. That was the biggest part of this. I know about this in this legal investment, right? Like we started seeing all the things get paid now, and you're kind of signing over, kind of getting kind of getting your lawsuit or your case kind of financed. But what I did not know is that there was foreign entities investing in that. That's where I think it gets a little too murky for me. Supporters argue that hidden investors were influencing litigation outcomes. Opponents argued the bill could make it harder for some plaintiffs to pursue legitimate claims. The legislator ultimately sided with transparency. From an insurance perspective, this is one of the biggest structural changes of the session. Insurance companies believe reducing outside investor influence may help stabilize liability claims and reduce pressures on future rates. Will it create immediate premium reductions? Probably not. Insurance markets rarely move that quickly. I've always been, since I've been in the industry, the biggest thing about insurance rates in the market is that it's like trying to steer the Titanic. It takes a while. You'll see legislative stuff come down, but you won't really feel the impact into the bottom line that what you pay as a policyholder for maybe a year or two down the road. But lawmakers clearly believe it creates a healthier long-term environment. Now, let's talk about the bill that probably generated the most consumer interest, HB 527 or 527, the Artificial Intelligence Claims Handling Bill. This bill addresses one of the biggest questions consumers have today. Can a computer deny my insurance claim? And Florida answer is now very clear. No. And I completely agree with this. I do not believe that AI should have the capacity by itself to make a claim decision. It should be a human touch, a human claim representative that is licensed that makes that final decision. I do not, AI can assist with the claim process, which makes it a little bit more efficient and those things, but it should not be making the final decision. And the legislation agreed with me, at least not by itself. Starting July 1st, artificial intelligence cannot be the sole basis for denying or reducing a claim. A qualified human professional must review the information and sign off on the decision. This bill received broad bipartisan support, and honestly, it is easy to understand why. Most people are comfortable with technology helping process information, but most people are not comfortable with technology making major financial decisions without human oversight. Think about it this way. Would you want a robot deciding whether your roof damage is covered after a hurricane? Probably not. Would you want a person reviewing the facts and making the final decision? Yes, because a lot of times with computers, it's kind of black and white, right? But we know from any standpoint in life that there's some gray, and there may also be a little bit of color to stuff. And there may be other explanations that a computer may not, or AI may not at this point in its current form, be able to detect. Most consumers would say um, that would you want a person reviewing the facts and making the final decision? Most consumers will say yes. This bill doesn't stop innovation, it simply creates accountability. One of my favorite ways to explain it is this: Florida basically told insurance companies you can use the robot to help, but the robot doesn't get the final vote. And I think most consumers can appreciate that. Next up is HB 1399. This bill may not generate headlines, but many industry experts consider it one of the most important insurance bills passed this year. To understand this bill, we first need to understand affiliate companies. Many insurance companies operate through a network of related businesses. For example, one company may handle underwriting, another may handle inspections. Another may provide administrative services. All of them may be owned by the same parent organization. There's nothing inherently wrong with that structure. The concern arises when regulators cannot determine whether payments between those entities are reasonable. Lawmakers wanted greater transparency. HB 1399 now requires insurers to provide documented evidence showing payments to affiliated companies are fair and reasonable. Supporters believe this prevents profit shifting. Yes. In other words, it helps ensure money is not simply being moved around behind the scenes in ways that make rate regulation more difficult. The bill passed with overwhelmingly support, and frankly, that level of bipartisan agreement is rare these days. Another significant bill that passed this session was HB 1263. This bill focuses on accountability among insurance company executives. Specifically, it increases penalties for executives who receive bonuses while their company is financially distressed or insolvent. This again is a no-brainer. Now, let's be honest, nothing frustrates consumers more than hearing about executives receiving large bonuses while companies struggles. Lawmakers clearly recognize that concern. The goal of this legislation is to ensure leadership decisions remain aligned with company stability and consumer protection. Supporters argued that executives should not personally benefit while policyholders face uncertainty. The bill passed with strong support. And regardless of political affiliation, many consumers will likely view this as common sense oversight. At this point, some viewers may be thinking, that's interesting, Rashonda, but how does this affect me? Great question. Because most legislation does not affect your insurance policy tomorrow morning, it affects the environment around your policy. Think of the insurance market like a giant ship, like the Titanic. Legislation changes the course, but ships do not turn instantly. They turn gradually. Over time, the AI bill affects how claims are reviewed. The litigation financing bill affects future lawsuits. The affiliate transparency bill affects regulatory oversight. The accountability bill affects corporate behavior. Individually, each bill may seem small. Collectively, they help shape the future direction of Florida's insurance market. Now, let's briefly revisit the biggest insurance bills that did not pass, or bill that did not pass. PIP repeal. Once again, Florida remains a no-fault state. Lawmakers simply could not agree on the proper balance between medical coverage requirements and affordability. Some wanted stronger medical protections, others wanted lower premiums. The compromise never materialized, so the bill died in committee. At this point, I would not be surprised if we are discussing PIP repeal again next year, and the year after that, and possibly the year after that. So let's look at the final scorecard for the 2026 legislative session. The Litigation Financing Reform Bill passed. The AI Claims Protection Bill passed. The Affiliate Fee Transparency Bill passed. The Insurer Accountability Bill passed. The Pet Insurance Reform Bill passed. The Insurance Workforce Development Bill passed. The property tax bills failed during the regular sessions, but ultimately evolved into the constitutional amendment now headed to voters in November. And of course, the PIP repeal failed once again. Overall, lawmakers focused heavily on transparency, accountability, and consumer confidence. Whether those efforts ultimately translate into lower premiums remains to be seen, but they unquestionably represent some of the most significant insurance related reforms Florida has seen in recent years. If there is one lesson from this year's session, it is this: insurance is no longer just about insurance, it is about technology. It is about litigation. It is about workforce development. It is about property taxes. It is about regulation. And all of those pieces connect in ways most consumers never seen. The good news is that Florida's market appears significantly, and when I say significantly, I mean significantly more stable today than it was just a few years ago. New companies continue entering the market. And like I said earlier in this video, we want to see that continue. We do. That's how you get rates down, because as new companies come into the market, they're usually coming in a little bit competitively priced, a little bit more lower. And that forces the other companies in the market to lower rates as well, because they have to compete. Rate increases have slowed. I want to stop here a little bit because I think people get the impression that their rate is not going up. That's not the case. It's not that rates are not going up, but they're not going up as significant. You will see sometimes rates are still increasing, but we're not seeing those $1,000 rate increases like we were seeing before. And also, to put a little cherry on top, I have seen people go down. Some of my policyholders that are coming up for renewal have gone down. I've seen just this week, one of my policyholders came up for renewal and their renewal went down by almost $1,000. Does that happen all the time? No, but it is happening. Some insurers have even filed for rate decreases. That doesn't mean every challenge has been solved, but it does mean the conversation has shifted from crisis management towards long-term stability. And that is a positive development for consumers. If today's quick bite helped you understand what happened with the regulatory bills and insurance reforms that passed this session, that is the goal. Insurance legislation affects the industry in ways most people never see until it reaches the premium. If you would like to review your policy or request a quote, please visit us at isomInsuranceGroup.com. Remember, it's down here on the screen. I believe it's right here on the screen. You'll see our website. Please feel free to, request a quote or a policy review. Preparation always beats regret. If you found this episode helpful, please like this video, share it with someone who owns property or owns cars or a business in Florida. And don't forget, drop comments below telling me which of these new laws you think will have the biggest impact on the insurance industry going forward, or any topics you would like for me to address in any future episodes. Quick Bite episodes now drop every Saturday at 2 p.m. Eastern. So remember, I'm only dropping one Quick Bite episode per week, not the 3 like we were doing before, only 1 per week. And it will drop on Saturday at 2 p.m. This video is for educational purposes only and should not be taken as legal, tax, or specific insurance advice. Please consult a licensed insurance professional regarding your unique situation. This is Rashonda with the ISOM Insurance Group here in sunny Florida. Thank you for watching. I hope you enjoyed this 2-part legislative series, and I will see you next Saturday for another Quick Bite episode. Please stay safe out there. Bye.
Thank you for watching. Visit us at isomInsuranceGroup.com.